Happy Friday, Eric Bible with the Bible team at Neil Home Loans, and it looks like Christmas came early. A full-on Santa Claus rally has engulfed the mortgage-backed security market and treasury markets, and I am happy to report that the 30-year fix this morning is opening up at 6.62%, down from last week's 7.01. And we know that this rally has been ongoing, and what transpired this week looks like has recalibrated the markets and aggressively changed predictions into 2024. And I want to jump into really what sparked this move down, the pivot from the Fed, and yes, rate cuts. Now, again, we saw this last year, literally this exact same time. So there is a little element of PTSD walking into this basically twilight zone, Groundhog Day, if you want to call it. But the difference is last year, the market was betting that we were going to see change. The Fed never said this time last year they were done. What's different this go around is Chairman Powell on Wednesday openly stated that the Fed has considered timelines for rate cuts. Now let's dive into it and let's unpack the week of events and more on the Fed to come. Tuesday, the rally was really continued with the all-important CPI, Consumer Price Index report released for the month of November. And there, no surprises. Market expected inflation at the headline number to remain at 3.1%, as well as the core at 4%. No surprises there. Came in exactly as expected. Market gave some that day. We started to see some improvement in rates, confirming the last week's improvements. But really, it was setting the stage for what would take place on Wednesday. And Wednesday, we received the Federal Reserve's final meeting for 2023. Now, rates did not change. The Fed did not cut or raise the benchmark rate. That, again, fully expected, anticipated walking into Wednesday. But what the market was eagerly waiting for was some evidence from the Federal Reserve on what the next actions look like. And it came twofold. So one, I've spoke before in regards to the dot plot. The dot plot is the voting members where they expect to see the benchmark rate in the coming months and years. October, we know they expected 2 additional rate hikes in 2023 and potentially more rate hikes in 2024. Well, that has changed. The market is now showing the Fed has shown a minimum of 3 rate cuts in 2024. Now, market is expecting potentially more like 6 in 2024. But the fact that the dot plots are now showing we are not going any higher, but now starting to come down, that sparked a significant rally in mortgage-backed securities. And that rally was exacerbated and confirmed when Jerome Powell took the podium, where he said specifically that the committee has discussed rate cuts. They are willing to entertain rate cuts before achieving that all-important 2% target on core inflation. Now, he did not give an exact number when asked by the collective or the press, but it was very, very different in tone compared to press conferences past where rate cuts were not only discussed, they were acknowledged and they were outlined. So what this means for mortgages. As we know, as inflation comes down, so do mortgage. As we start to see a contraction within the economy, mortgage rates respond appropriately. Now, over the last 45 days, we've seen rates pull back an entire percent. In the last week alone, that decline has been almost an additional quarter, or in some instances, 0.5%. So inside the last 45 days, rates have dropped almost an entire 1.5%, which is bananas. And we're already seeing an increase in applications week over week for both purchase and refinance. What's alarming though, inventory is still incredibly tight. The message we need to continue to deliver to our consumers is right now, real estate is on sale. We know the holidays take consumers' attention away from the market. Historically, this time of year, it's slow, regardless of what's happening with rates. My biggest fear remains if we continue to see rates come down as we expect, and now as we're confirming, inventory doesn't come online, home prices are going to explode. You think the competition is fierce now? Wait till we see rates march low sixes, high fives. All the clients that have been sitting on the sideline are now coming into the market with no inventory. And again, my concern here is especially first time home buyers that were already pushing their budget may be priced out of the market forever. It is our responsibility to convey this message to our clients. We have to pick up the phone and inform them what we're seeing, what we're experiencing, and what the market is telling us. And if you need help conveying this message whatsoever, we're here and happy to help. There's 2 weeks left in the year. 2 weeks to ensure your success leading into 2024. How will you show up? I wish you all an incredible Friday, an even better weekend, and most importantly, happy holidays. Thank you.